In this speech, Jerome Powell, the head of the Federal Reserve, talks about why the central bank decided to lower interest rates by 50 basis points, or half a percentage point.
Powell begins by emphasizing the Fed's commitment to achieving its dual mandate, maximum employment and stable prices.
Of maximum employment and stable prices for the benefit of the American people. Our economy is strong overall and has made significant progress toward our goals over the past 2 years.
Let's discuss the key points of Jerome Powell's speech.
The Federal Reserve's goals. Powell explains that the Fed is focused on two main goals: keeping prices stable, controlling inflation, and making sure that as many people as possible have jobs, maximum employment. Current economic situation: the U.S. economy is strong, but the labor market has slowed down a bit. Inflation, which is the rise in prices, has dropped from 7% to 2.2%. The Fed wants to bring inflation even lower, to 2%. Rate cut decision: the Fed decided to cut interest rates by 0.5% to help maintain economic strength and continue lowering inflation. They believe this will also support the job market. Economic growth: the economy grew by 2.2% earlier this year, and consumer spending remains strong. Investments by businesses are improving, though the housing market has weakened recently. The Fed expects growth to stay steady at around 2% for the next few years. Job market: the job market has cooled off, with fewer new jobs being created, but unemployment remains low at 4.2%. Wages aren't rising as fast anymore, and the labor market is less tight than it was before the pandemic. Inflation has come down, but is still slightly higher than the Fed's target of 2%. They predict inflation will be 2.3% this year and closer to 2% next year. Future plans: the Fed will continue to make decisions based on economic data. If inflation stays high or the job market weakens, they will take action. They aim to find the right balance between keeping inflation low and supporting jobs.
In the labor market, conditions have continued to cool. Payroll job gains averaged 116,000 per month over the past 3 months, a notable step down from the pace seen earlier in the year.
It would be interesting to recall what Jerome Powell said during his speech at Jackson Hole. Let's try to transport ourselves there.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. We will do everything we can to support a strong labor market as we make further progress toward price stability. With an appropriate dialing back of policy restraint, there is good reason to think that the economy will get back to 2% inflation while maintaining a strong labor market.
Jerome Powell's speech at Jackson Hole was about the current state of the U.S. economy and what the Federal Reserve plans to do next. He talked about how inflation had gone up because of the pandemic and other issues, but now it's coming down closer to their target of 2%. Powell mentioned that the labor market has also calmed down after being very tight. He signaled that the Federal Reserve might lower interest rates soon, but it depends on how inflation and employment numbers look in the coming months. He emphasized that the Fed's goal is to keep inflation low without hurting the job market. The timing of the rate cuts will be carefully considered based on new data.
The arrival of the COVID-19 pandemic led quickly to shutdowns in economies around the world. It was a time of radical uncertainty and severe downside risks.
Jerome Powell discussed the impact of COVID-19 in his Jackson Hole speech, explaining that the pandemic led to significant disruptions in the economy. He mentioned that the sudden shutdowns around the world caused radical uncertainty, and governments responded with strong measures to prevent economic collapse. In the U.S., the Federal Reserve took unprecedented actions to stabilize the financial system. Powell highlighted how the pandemic created major supply chain issues and labor shortages, which contributed to the surge in inflation. While the economy eventually recovered, the pandemic left lasting effects on how people work, spend, and save. He noted that understanding the full impact of COVID-19 on inflation and economic recovery will take time.
Spending recovered strongly in the first half of 2021, and the ongoing pandemic shaped the pattern of the recovery. Lingering concerns over COVID weighed on spending on in-person services.
But let's return to today. Jerome Powell delivered quite a surprise. Today, the Federal Reserve has gained greater confidence that inflation is steadily moving toward 2%. The risks to achieving employment and inflation goals are roughly balanced. Confidence in reducing inflation is the key reason for a faster rate cut.
Inflation has eased notably over the past 2 years, but remains above our longer-run goal of 2%. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.2% over the 12 months ending in August, and that excluding the volatile food and energy categories, core PCE prices rose 2.7%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets.
In summary, Powell reassures that the Fed remains fully committed to maintaining a healthy economy by controlling inflation and supporting employment. He emphasizes the importance of balancing both goals, acknowledging that the path to achieving stable prices and maximum employment is dynamic and requires ongoing adjustments. The Fed is closely monitoring economic data and risks to ensure they make informed decisions. Powell also touches on the broader impacts of the Fed's actions on everyday Americans. He acknowledges that inflation, particularly high inflation in the past few years, has caused significant hardships for many, particularly for those who struggle to afford essentials like food, housing, and transportation. The Fed is acutely aware of these impacts, and Powell underscores that their decisions are made with the aim of protecting the economic well-being of families, businesses, and communities across the country. Looking ahead, Powell notes that while inflation is moving closer to the Fed's 2% goal, risks still exist. The Fed will remain flexible and adjust interest rates as needed to navigate any uncertainties or shifts in the economy. This could mean slowing down the reduction in policy restraint if inflation proves persistent or, alternatively, providing more support if the job market weakens unexpectedly. Powell highlights that the Fed is not following a preset course, but is instead taking a meeting-by-meeting approach, carefully analyzing new data and economic developments. The ultimate goal is to find the right balance between encouraging economic growth, keeping inflation in check, and supporting job creation, all while being ready to adjust its policies in response to new challenges. Lastly, Powell emphasizes the long-term importance of keeping inflation expectations well anchored. This is crucial for ensuring that businesses and consumers continue to have confidence in the economy. If inflation expectations stay stable, it makes it easier for the Fed to manage actual inflation and avoid sudden spikes in prices. Overall, Powell conveys the message that the Fed's actions are carefully thought out and aimed at ensuring long-term economic stability, with the flexibility to respond to whatever economic conditions arise. He closes by expressing the Fed's dedication to its public mission, assuring that everything they do is in service of the American people.
Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you so much for being with us. Subscribe and hit the like button.